London is the biggest foreign exchange market in the world. Yeah, the problem is that now someone big, someone that is kind of in bed with the regulators, it could be the government, is demanding delivery, and that kind of throws a spanner in the works of this fractional reserve paper leasing mechanism that in the LBMA is limitless. I mean, at least in New York, there's a limit, I think, to hypothecating gold. Back in end of January, beginning of February, it was said that it was 400 tons that went from the Bank of England, and then we to the U.S. physical. And then we also have been hearing from StoneX, who's a LBMA member and a pretty big bullion dealer, that it's more like 2,000 metric tons that have flowed into the United States. And the other thing is that it's not just, it seems to be flowing outside the COMEX mechanism as well. So not just through COMEX. But the implications to me is that it could unravel the whole LBMA, basically fractional reserve scheme for gold, or virtual gold trading, whatever you want to call it, paper gold. And that's the thing, Jesse, the bullion banks and the bankers in general don't see anything wrong with that, because that's how they operate the current fiat currency system. The Federal Reserve, back in 2020, under Jay Powell's leadership, they removed all the reserve requirements for banks. So if you put a dollar with a bank, now they don't have to keep any in reserve. It used to be that I think they used to keep more than 10 or like 12%. Now it's nothing. And I guess it was justified maybe because of what happened in 2020, 21. But now we're in 2025 and they still have that. So that's what they do with gold. And they do it because they've been able to do it because most people, usually the funds and the speculators, they trade gold on the LBMA, on the OTC market in London. It's just like a foreign exchange. It's like a currency. It trades. London is the biggest foreign exchange market in the world. The problem is that now someone big, someone that is kind of in bed with the regulators, it could be the government, is demanding delivery, and that kind of throws a spanner in the works of this fractional reserve paper leasing mechanism that in the LBMA is limitless. At least in New York, there's a limit, I think, to hypothecating gold. But in London, it's you can do it 100, 200, 300 times. And the LBMA, contrary to popular belief, the whole operation there, because of the Big Bang deregulatory or Big Bang rules in 1986, 87, under the Thatcher government, basically gave control of the gold market to the Bank of England. And the Bank of England said, the bullion banks can do whatever they want. We're going to turn a blind eye. And that's the way it's run. It's self-regulated. And I guess, Jesse, this might be things coming back to haunt them, because they thought they could run a gold market based on, basic mythical values. As I think President Putin called the Western financial system a few years ago, all based on, money created out of thin air. So LBMA, it's gold created out of thin air, and silver as well, of course. Investors are still focused on the general stock market, and maybe they don't. General investors, they're not value investors. They go with the herd. And they haven't sat down and done the maths of how much cash flow a lot of the miners are producing at these kinds of level $3,000 gold. Yeah, maybe. I mean, one day it will change, but I don't know when it will be. It's improved a bit in the last few weeks. I've noticed with the miners that I hold on this kind of space that we are, the gold, silver, sound money space. We're well aware of it, and it is a growing space, but it's still, I think, minuscule otherwise, And yeah, I mean, when you talk to people, they have no clue about gold. They think that premium bonds are the safe place. Like premium bonds are a kind of government bond that you buy here, and they do a draw every month, and you might win loads of money. But no talk about gold. Yeah, you can put £100 in a premium bond, and then they do a draw every month, and you might win, £1,000,000. But that's the odds there are huge. But people think, at least I've got a chance to win, and that I can't lose my £100. But they don't understand that you're losing purchasing power by keeping those £100. I mean, gold here in the UK, the ounce of gold has gone from about 220 ounces, 220 pounds when I first bought gold here, to now 2,350. Currency has lost 10 times its value versus gold. And people are still, I think it's just is because people are not, schools and even universities don't teach the fact that gold has always been money. And I didn't know this up until maybe 25, 26 years ago. I had to learn it on my own. As the dollar is concerned, I mean, it's lost since 1953, 99% of its value versus gold. The last percent can go on for a while because it's not like the drop to 99% happened like in 2 years. It's been happening for over 70 years. I think people might wake up, or our politicians and the people who run things might wake up when we start seeing gold go up 500, 1,000 or more a day. Then they'll wake up. Right now, I don't think they're still awake to it, even though I think it looks really bullish, the long-term chart of gold. I think it's going to be very hard to stop it going up. Or the way I like to look at it means that our currencies are in terminal. They've entered the phase of the, all of a sudden, I think it was the Hemingway's novel quote, "How did you go bankrupt? Gradually, and then all of a sudden I was bankrupt." I think we are entering that stage, and it doesn't take years. It could take less than a year. It could be very quickly. That's what happened in Germany in the 1920s. All of a sudden, the currency completely collapsed, i.e. people didn't want the currency. They wanted to get rid of it for anything that had some intrinsic value.